What's going on, guys? How are we all doing? Good morning, good morning. Hope everyone's having a lovely weekend and a good Sunday. Okay, so to kick things off, this stream is kindly sponsored by BitUnix. I've managed to secure a pretty interesting deal for all of my audience. It's a 30% rebate, which basically means you get free trading margin. You deposit 100 USDT, you get 30 USDT futures bonus. Deposit 500 USDT, you get 150 USDT futures bonus, and deposit 1,000, you get 300 USDT free futures bonus to trade with. So an absolute no-brainer, guys. Rewards are distributed every Monday, and highly recommend getting involved. Okay, so we're going to do a classic market scan today. Good morning, Mary. Nice to see you. So let's just pull over some charts. Right. Okay, so let's get into it. We'll start things off with BTC. All right, so let's go monthly. Good morning, Path. How are you, JJ? All right, we haven't actually looked at the monthly in a while. Okay, so good to refresh, good to recap. Okay. So at the moment, you can see that we have, in fact, the last month locked in a monthly divergence on BTC across the RSI low. Okay, so you can see here lower highs on the RSI, higher highs on price. Okay. And the confirmation candle is this red locking candle here, okay? Now, that being said, we do not have the double confirmation across the awesome oscillator, as the oscillator here is in fact also making high highs, okay? So we have an RSI divergence, but we do not have a AO divergence to confirm that double divergence confirmation. What does that mean? It means that there is a chance of topping and dropping from here, but it's not nearly as strong a probability as as if we had the double confirmation across the awesome oscillator. That would be a much stronger signal. So not something I'm particularly worried about. Now, weekly, still in good stead at the moment. Okay, we're still in good stead despite the recent drawdown on price. You can see that we're still holding up in this pocket of weekly intra-demand here, okay? So impulse, cluster, impulse, and we're still holding up in this area as price taps and holds into this zone, okay? The RSI is in good stead as well. You can see that we're still simmering above the 50 level here. So still in a very healthy position on the weekly. Nothing too alarming. I know there's been a lot of panic in the market of late. But really, guys, there's really no reason to panic. There's no cause for real concern in this area. Everything is looking fairly healthy, fairly natural, okay? And at the moment, until we start losing some key critical levels across BTC and ETH, there's no major concern to panic, okay? Hey Flo, how's it going? Okay, so down to the daily. Right, you can see that we're starting to sort of scope into this daily range here. In fact, let's take a look at the 4 hour. Right, get a bit more granular with it. So again, you can see that weekly demand zone here. So it's a lot wider, obviously, because we're on the 4 hour. But we're really working with this range here. Okay, so we've got the range high, the range low, sweep of the range up here, which capped the top down into weekly demand. Then we have that interaction with weekly demand, come back, reclaim the range, fail at the mid, and now again retest the bottom as support, break down, and then back into weekly demand. So really, technically speaking, price has been respecting levels and respecting the technicals quite well in this area, which is nice, right? It's always what we want to see, okay? Because even though we're not moving into positions, it means that we are staying disciplined, staying stringent, observing the markets with patience, and just waiting for that cream of the crop setup to present itself. Now we can take a look at the deltas. Deltas have been heavily skewed to the negative side of late, okay? Heavily skewed. So you can see on the hourly here just how important these spikes are in terms of the overall delta of the page. Okay, you can see the gravity of these spikes. Heavily skewed to the downside, mainly on this push down here, this recent push down, which caused most people on CT to completely lose their shit. All we're doing really is pushing down into bids here, right? Producing this negative delta. And also, guys, just to note as well, like, unless we're in super trending conditions, unless the market raging to the upside or nuking very heavily to the downside, although crypto is a 24/7 market, it's just a gentle reminder to just clock off on the weekends, okay? Weekdays are for locking in, weekdays are for scanning, analyzing, trading. The weekends are for clocking off, recharging your emotional batteries, recharging your mental batteries, and just leaving price to do its thing. Because even though we usually get interesting price action on Fridays for whatever reason, the playouts only really tend to happen on the Mondays. And you can see that here, okay? So if we go back to price on the hourly, this here is basically the weekend period here, right? So leading into the weekend, and then the weekend here has just been completely lackluster, and absolutely fuck all going on, okay? So there's ever, you know, if you're thinking about taking positions going into the weekend, I'd urge you to take a beat almost always, because essentially what you're going to be doing is just putting yourself into a deliberately negative stance from the get-go, okay? What I mean by that is, and it's a pitfall that I used to do even last couple of years, I'd do it quite a lot. I'd enter into positions on the Friday or the Thursday, and unless they're golden positions that you simply cannot, you know, sleep without being in them, then skip them. Because essentially all you're going to do is just sit through a weekend of uncertainty, a weekend of sideways crab, nothing happening, no impulse to the upside or downside relative to your trade position. And it's just going to sort of, you know, live rent free in your head, and you'll experience cortisol decay, where you have, you know, thoughts and narratives of doubt that creep into your mind. You know, it should have moved by now, my trade should have pushed from here. Now, you know, really all you're seeing is just lackluster, low volume activity across the weekends, and you'll almost always get a chance to reposition on the Monday. Okay, so there is really no rush to move into positions so hastily moving into a weekend. And it's one of my pre-trade rules that I've sort of put in place, that I really have to sort of challenge myself before thinking about taking, you know, positions into the weekend. Do I have to do this, right? Is this really going to be the 100 out of 100 creme de la creme golden setup that I simply cannot sleep through the weekend without being positioned into? If the answer is genuinely, honestly, hand on my heart, no, it's fine, I can wait, then do so, okay? Because, you know, this sort of stuff is not really fun to live through the weekend. Also, it distracts you, you know, it takes you away from that, you know, that wholesome friends time, family time, whatever it is, that time to sort of clock off, recharge. And it is fundamentally important that you do that as well as traders. Okay, we are not machines, we are human beings, and we need to understand that. We need to take that time off, we need to touch grass. So yeah, just a little side note on taking positions into the weekend. So I want to take a look at ETH, obviously. Right, ETH is still the most interesting market out. Let's do a top down. Right, so again, still simmering just underneath all-time highs on the monthly. The weekly tapping into this block here. Okay, if we go down to the 3-day, we can see that it's a very clean pocket of intra-demand here. I've been speaking about this for months. Okay, a very, very clean pocket of intra-demand. At the same time, we are simmering at the 3-day 50 level. Okay, so a potential exact reset into intra-demand on the higher time frames, potentially on Ethereum. Okay, so very, very, very interesting spot on the higher time frames on Ethereum. Okay, goes without saying, we are of course simmering underneath all-time highs as well. Okay, and you don't have to be a genius or many years into your trading journey to know that consolidation underneath resistance or above support for breakouts or breakdowns is exactly what we want to be seeing. Right, onto the daily. You can see that sort of demand zone here and that interaction with the demand zone in a bit more detail, slightly more granular. Okay, tap down to the 30 level, moving away. Now go down to the 4-hour, and this is really sort of the primary time frame that we should all be looking at the moment. Okay, and it has been for a while. So we have had a few things. We've got a few things to sort of break down on this chart. Okay, so the first thing is actually I'm just gonna remove all of this so we can repaint it and break it down step by step. Okay, do some proper price action charting and technical analysis. So so my eye is drawn to the first swing high and swing low for this basic range here. Right, maybe we can stretch it up here, see what this looks like. But really I like this level the most. Okay, so we've got this range simmering underneath all-time high. Okay, so this is the consolidation and the range that I wanted us to be confined to for Ethereum for really as long as possible, to give us more gusto so we can break out to the upside, because we've had a very, very fast move on the higher time frames leading into all-time high, which is technically inefficient. So this consolidation and this range taking place here is exactly what we want to see. Now, as we were confined in this range over recent weeks, I was talking about this pocket of higher time frame 3-day intra-demand here. We can see that we've now broken down and tapped into that zone. So lost the mid of the range, moved down. Also just FYI guys, whenever you see stuff like this, I was seeing a few people rush into position in these areas here. Like, you may be right 1 in 10 or 1 in 50 times, but please do not try and attempt this. Okay, this is just, stupid knife catching and, to put it bluntly, irresponsible trading. Okay, the reason being is because we have this clean, independent, unswept low here. Even though we have oscillators smashed down, overextended, etc., like, do not try and knife catch here, because we are almost always going to take out this low, whether that's a breakdown, sweep, or deviation. You are almost always better off waiting for that interaction, right? So waiting for price to take out that low, and then you can assess, then you can analyze and think about positioning. Okay, but I think this is one of the traps that most new traders and even years into their journey fall victim to, which is that premature positioning takes place, right? People think they have to rush into positions, and obviously you have the classic stuff, not being patient enough, not being stringent enough, but being premature on your executions is also a big demon for many traders on their journey. You have so much more time than you think when you're positioning into trades, especially if you're a swing trader. Looking at time frames like this on the 4-hour, you have a wealth of time to position into trades. Like, just look at what's happened here. Okay, we're still mucking around in this area. We've tapped down into this weekly demand. We're just hovering underneath this level here. Now, This is where the nuances, the discretion, there's two real areas on this chart where nuances and discretion take place, and what make it quite hard to sort of break down executions on Ethereum, but also more generally speaking, highlight why trading is so difficult to the masses. It's because you need to know when to bend the rules, you need to know when to apply discretion. And the two areas I'm talking about here, number one is supply zone. Okay, so we've created a pocket of interest supply in here, which means that if we are to call this the low, right? If we are to simply hover around here during the weekend low volatility period, okay, and then do something like this and reclaim, okay? Normally, that would be a great deviation trigger, okay? So you call this deviation here into that higher time frame 3-day demand with this technically invalidated divergence, which we're going to speak about in a little bit, but still very, very noteworthy. And we're reclaiming this range low here. Now, normally it would be a no-brainer trade. Now, the reason why it's so difficult to assess whether to take the shot or not is because we move into this pocket of supply here. Now, within my deviation rulebook, as per the rules of my playbook, if you're deviating a range low, but moving directly into overhead supply, you must skip it. If you're deviating a range high, but moving directly down into a pocket of demand, again, it has to be a skip. Essentially, what you want to be moving into, technically speaking, for deviation trades is simply a scorch down. Okay, so you want to be moving into an inefficiency. So say, we could do something like this. Say this price action occurred here, right? And we basically skip out all of this, and price just mucked around here, hovering above the mid. Then we scorch down, right? So again, ignore all of this price action here. Then it would be perfect, right? It would be moving into so the path for the trade would be clear as the sky, right? So that's basically what we want. We want to basically move into a completely clear path for the trade. We don't want the first hitch or the first trouble area to be directly into where we're positioning, essentially. Now, the discretionary element and the difficulty in all of this comes into play when you say to yourself, okay, cool, well, technically, as per the playbook, we shouldn't be taking this position. But when we take into consideration the strength of the higher time frame trend, i.e. how raging Ethereum has been, right? Also, this tap into 3-day demand here, and we have those sort of prevailing winds to weave into the trade thesis. Do we bend our rules, right? Or do we bend our rules and say, okay, cool, I'm not going to take full size on this trade, but for a pro trend 4-hour trade on Ethereum, I'm going to take 50% my allocated usual risk. It's very difficult to make that call, and to be honest, it's a question that I've been asking myself over the last 2 days as well. Do I move into position here? Do I take a partial position and then potentially add more if we start invalidating the zone? So if we start getting some good closes into this zone on the 4-hour, then we could look at potentially adding into position. If we want to be a little bit safer, a bit more conservative, and wait for higher probabilistic odds to be in our favor, then we could just simply wait for a streak through and complete invalidation of the supply zone to add to that position. Okay. So again, as I go through the years as a trader, I realize more and more that my performance, my P&L, my equity curve grows more and more as I lean into my years of experience. I lean into and trust myself, right? Just have more confidence, back myself further in my analysis and say, okay, cool, right? You have a a playbook which is essentially acting as bumpers. Okay, the playbook acts as like, if you go bowling, you've got those bumpers, you know, the rail guards either side of the lane. They keep you in check, which is great because sometimes you haven't had good sleep. Sometimes you've had a fight with the missus. Sometimes you're not thinking at top level for whatever reason it is. You might be ill, you may have other things going on in real life, and those bumpers keep you in check. Well, they keep me in check personally, mostly in moments of not fully functioning cognitive ability, essentially. But should I adhere to them, you know, one-to-one, as, you know, treat them as gospel? The answer is no. Okay, and I ran through this recently with the XRP position that I took, as to why I bent the rules, etc. And even if that position doesn't play, that's fine, right? It was still the right call to take that trade. It was still the right call to bend the rules in that moment. I'm not going to run through it here because I'll sound like a broken record, but I believe I ran through it in the last stream or the stream before. So you can look at that in depth if you wish to. So yeah, to take the trade or to not take the trade, to build into the position or to not build into position, right? We'll have to see what that reclaim looks like, what the delta dynamics look like as well, right? As we, if we reclaim. Alternatively, of course, we could simply fail here, right, and start grinding down lower. In which case, this argument is null and void, right? It's a redundant conversation to be having. But obviously, at the moment, it's a well-poised conversation because we want to align with the trend as best possible. And always when I'm looking at pro-trend range formations that are, you know, just been broken down off, right, especially into higher time frame demand, even with this structure on the oscillators, my mind is, of course, geared towards aligning with the higher time frame trend and looking to position into the trend as best possibly. So the other discretionary element and point of potential nuance on this chart is, of course, this divergence here, right? Now, on the one hand, we have, right, so when positioning into divergence trades, there are a few golden rules to remember, okay? So number one, resets. Don't go too close to the mid. Right, so what I mean by that is you don't want the top of the arc of the bullish divergence to come too close to the midpoint, i.e. between the 45 and 55 region. Okay, so we're good here. As we've only come up to, what is it, 34. Okay, so it's great, yeah. Number two, overextensions. Okay, so you want both peaks of the divergence to be well overextended. And you can see here, we have both peaks very, very overextended here, okay? You can even see these red glowing caveats that the RSI is printed when the indicator goes deep into overextensions, okay? So the first leg down goes to 18, second to 15, okay? So very, very, very overextended legs from the divergence. We're ticking two boxes very, very well, okay? Number three, structure. Okay, so we talk about structure. We're talking about the shape of the divergence. Okay, typically speaking, there are a few niche divergence structures that tend to play out quite well, i.e. spiky divergences, but normally we want to see a clean arced formation. In terms of structure, which is something that I place quite a bit of emphasis on, this is really one of the cleanest divergences I've seen in a very, very long time, okay? Add into that a general rule, right? A more general rule for trading in general is time frames. So we tend to get a lot of divergences on the 5-minute, the 10-minute, 15-minute, 30-minute, and even the hourly time frame. But to have very clean divergences that print on the 4-hour is actually a very, very rare thing. Okay, so we have that here, right? We're of course operating in the 4-hour time frame, moving into potential 3-day demand here. Number 5, double confirmation. Okay, what that means is that you want to see the divergence present across the RSI and the awesome oscillator. Okay, and you can see that we do indeed have that double hump structure across the awesome oscillator, diverging against price here. Okay, number 6. Is it valid? Okay, and really what this means is, you know, is the divergence actually a valid divergence? At which point, even though everything's been golden so far, really 10 out of 10 stuff, and actually we can add another one into this as well. Confluence. Right, so are we moving into an area of confluence in terms of left side confluence on the charts? Are we operating in an opportune point to do business in the markets? Very much so, right, as we move into this pocket of 3-day demand. Okay, so really the only thing that's holding us up here is number 6, because we have a essentially what we have here are lower lows. Okay, so price also making lower lows. Now the fact that the oscillator, the RSI anyway, and price are both making lower lows mean that there is no divergence, right? Price is not diverging away from the oscillators. Now on the AO, we're just about good. Okay, this is basically flat here, right? If anything, it's slightly higher lows. Okay, slightly higher lows. But on the awesome oscillator, we're pretty much good here. It's just the RSI which has basically broken the rules and made this a technically invalid divergence against price. Now the question again is exactly the same thing that I spoke about with this pocket of supply in terms of a deviation trade. You know, given the strength of the trend, given the context of the market, should we bend our rules in this area, given the structure being so clear, given the fact it's a 4-hour divergence and not a 15-minute divergence, given the fact that it's moved into this pocket of 3-day demand? Should we be bending our rules ever so slightly and go, okay, fine, this has technically invalidated itself as it's printed lower lows, the same as price, but given the whole context of the trade thesis, should we start bending our rules? Okay, now if we look at the deltas as well, right, this could be additional sort of confluence for the trade. And yes, as you can see, basically the way that deltas print on divergences is you normally get lots of delta on the first leg down, not very much on the second. Okay, so you can see that here, right? First leg down on the divergence. Obviously, we're looking at a lot more granular. We're looking at on the hourly here. You go to the 4-hour, you can start to see that divergence a bit more cleanly. But for ETH and BTC, I tend to operate on the hourly time frame for the delta templates. If you don't know what delta is, I have a full video on delta, and I teach delta in close detail in my Discord group as well. There's a 7-day free trial if you want to click in the description and join the group. We'd love to have you, and we use delta very intimately. So you can see here we have that nice cluster of delta as we come down. We also have a ton of aggregated liquidations in this area as well. So the deltas are looking good for Ethereum and very healthy to sort of support the confluence of that trade as well. Now the conversation comes into, okay, cool. Now do we take the divergence and this whole trade argument, right? The 3-day confluence, all of this stuff, the structure of the divergence, etc., and then sort of bolster that onto the deviation trade, right? So could that then add as supplementary argument towards the deviation trade, which again, you know, leans us to be more inclined to take that deviation trade more inclined to bend the rules on that deviation trade now that we're weaving this into the argument as well. Okay, so again, there's a lot of thought processes that take place. There's a lot of mind games. Okay, sometimes it helps to write things down, whether that's in a Word document, but I'd advocate doing so with pen and paper. And just preparing yourself in advance, just so you can map out everything mentally, down to the risk you'd allocate to the trade, down to where you place the stop. Okay, so if you are watching this video or live stream and you don't really have a system, or you have a system that's based on the lower time frames and you're thinking about migrating to the higher time frames, 4 hour plus, I highly recommend doing so, because what it means is that you can start looking at stuff like this. You know, we've been speaking now for half an hour, right? And 20 of those minutes at least have been talking about the breakdown of this Ethereum position, all the way from the higher time frames down to the 4 hour here, okay? And talking this trade through, talking about potentially positioning, and that sort of premeditation, I find anyway, much more relaxing and much more effective in the markets, right? You've obviously got the aid and help of the fact that as you move closer towards the higher time frames, you get stronger signals, right? You get less toxic price action, less false signals in the market, and higher probabilities on your trades. But then that's further compounded by the fact that you also have time. Right, you've got time to sort of map things out, really work things out, and not just being systematic about stuff. Right, you're not just following your gatekeeping process, your pre-trade process, and sticking within those rail guards or bumpers. You're finding out, where and when to bend the rules. Right, which is really where things get very difficult, but also where things get very interesting with trading. Okay, you start to grow as a trader a lot more when you realize, okay, cool, first I've mastered my system, right? I've put in the legwork, I've developed the system, I know the system inside out, right? I don't need to run through my pre-trade process digitally or on paper. I know what my system says and I know when to be operating. But then furthermore, when should I be bending the rules based on the strength of the trend? Now, if we're in range-bound bracketing markets on the higher time frames, the answer is probably never. Okay, so just wait for your system to tell you when to execute. But when you start moving into very strong markets, very trending markets, and you learn when to bend those rules, and you take the time necessary to really think about when to bend those rules and how you would execute, what size you place on the trade, where you place your stop loss, where your invalidation is on the trade, think about, the time you're willing to put into this trade, the mental energy you're willing to allocate to this position, that you may suffer drawdown for X days, whatever it is, you can start running that position forward in your mind. You're basically forward testing in your mind already. And when you start trading in that manner, when everything's super thought out, and there's been a lot of care and respect given to both the trade and the markets, then of course you have less stress going into the position, number one, because you're not trying to work things out frantically in the moment. Okay, all you're doing is turning up and going, okay, cool, I've seen what I want to see, I'm pressing the button. Okay, but then also a sort of hidden bonus I found as well is that, even if you lose that position, you have less post-trade stress as well, which is quite nice, because you know that you thought that trade out, you played that trade out in your head, and you really gave it the sort of care and respect that it deserved. There's very little regret, right? And one of my issues and one of my biggest sort of stress generators in trading over the years was that feeling of regret. Like, I shouldn't have done that. I operated in a way that I shouldn't have done. I didn't respect my journey. I didn't respect my system. I didn't respect me as a trader. I let those sort of emotions of FOMO, greed, whatever it is, take place in my mind, dominate my mind share. I wasn't operating rationally, logically. I'm better than this, and with this process, you're really giving the market the respect it deserves, and also there's a shit ton to sort of pick apart and learn from. Even if you take a loss, but you've gone into this level of thought process, it's still a win. It's still a win for the long scale, long term health of your journey. Michael Jordan's famous for a quote and says, I love winning, but I also love losing, because losing is what makes you win, right? And all the losers build up yourself and get you to success, basically, because if you give those losers again the respect that they deserve, through journaling, through reflection, and through integration, then you really are learning a lot from the process. And maybe sometimes you go, okay, cool, I actually operated 100 out of 100 on that trade, and I have 0 to learn from. I have 0 to sort of garner. And that's not just turning up and looking at the trade one day, right? When I go into my journaling, I tend to look at the trade over and over again. So one morning I'll look at the trade, the next morning, maybe I'll take a week off and come back to it again and really try to pick it apart. And I may remember something like, okay, cool, well, it was actually the low volatility weekend period that made you choke that position, or whatever it is. It may sort of, light may come out of it later on in time. So although it's an uncomfortable thing, although it's a painful thing, journaling is critical, it's fundamental, it's so important to your development as a trader. And yeah, again, just give it the respect it deserves. Okay, so yeah, respect is a word that's cropping up a lot in this stream, and I do hope you sort of garner something from that as well. Okay, so give everything the time, the respect, give the trade the respect it deserves as well. Let the trade breathe, let the trade do its thing. If you put this much thought process into a trade, and then you start choking the position because you're simply underwater, you need to step away, right? You need to back off. You need to leave that position, let it run. I'm not going to get into the aphorisms of reducing size and widening stops as well, because I've been sort of beating that dead over the last few weeks. But again, all things that will get you to your end goal quicker, even though they seem like they get you there slower. And fundamentally critical and important practices to set in place. Anyway, bit of a rant on Ethereum. Just wanted to get into my thought process, the way that I really start thinking about the markets when I'm looking to position myself into them. And again, I've been in the process of trying to size up over the months, over the years, trying to trade less, trying to trade more on the higher time frames, move more towards the latter end of swing trading into sort of the beginning end of, the beginning starts of position trading, etc. And again, as I do so, the opportunities crop up far and few, and as a result, it's often that I'm taking this level of sort of analysis on a trade, thought process, and everything from the deviation we spoke about into this divergence trade, into the higher time frame picture, etc. Yeah, a lot of thinking, a lot of writing, a lot of lying in bed, staring at the ceiling, thinking about different elements of the trade, different elements of the chart, right? Just playing that through in my head, trying to pick the trade apart as well, right? So not just thinking about the pros of the trade, thinking about the cons of the trade as well. And giving myself the respect that I deserve as a trader. I put in tens of thousands of hours over 8 years, and thinking about the trade, thinking about the markets, breaking it down in as high level as possible, but then also not getting frozen in analysis paralysis and sizing up and smashing the size when it's time to as well. I think that's been a big thing, just knowing when to push the button, not getting frozen out of the markets, finding that balance between high level analysis, but then not succumbing to analysis paralysis, and realizing, you can get into the weeds with all this sort of stuff, but once you make a decision, back yourself, right? And if you need reminders, just simply do stuff like this and go, okay, cool, this is what I'm moving into. All good, right? All good. Anyway, a bit of a rant there on ETH, but I hope you learned something and garner some value from the ramblings of a madman after 8 years in the markets. What's up, DW? Nice to see you, man. Been a while. You good? Okay, so not going to look at my full watch list today because I'm a bit pressed for time, but we can go into some markets. Why not? We can take a look at some of the interesting markets here. Off top of the dome, hype. Look at hype. So 12-hour is an interesting time frame to look at. Okay, so deviated the high here, locked underneath, came down, struck down here as everything was bleeding. Taking out this low into origin demand here. Okay, so interesting balance point. We go down to the slightly lower time frames. The 4-hour has been, we've seen so many divergences printing recently over the 4-hour time frame. Okay, so as you can see here, super clean divergences. All right, really lovely structure across both the oscillators. Very nice indeed. Deep is another market I've been stalking as well. Okay, so again, we come back to the 4-hour time frame here, and these divergence structures really are as clean as they come. Full transparency, I haven't actually pulled the trigger on Deep yet, and the reason being is because, again, that sort of gut, that discretionary element comes into play as well. Yeah, it comes down to the sizing, I think, and the sizing element of things. I really want to be 110% before I pull the trigger, even if it means I'm entering at a slightly less opportune point, right, with a slightly wider stop. I much prefer to do that. And the two reasons why I haven't quite taken the deep trade, and I was thinking about this over and over again. First, because if you look at the higher time frames here on the daily, firstly, we have a very nice overhead situation here. We have a potential trend line that we can build into on the higher time frames. If price goes up and does something like this, we could catch an early rise of the train. On a great setup. Okay, if you look at the higher time frames here, not much going on, right? Yes, we've taken out this level, but you kind of have to zoom in to see it on the daily, and I don't really like that. If you look at my my pre-trade process, what I call gatekeeping, you can see that along the way we've got this gate here. Has enough damage been done? You want to see severe signs the faders have got messed up. Okay, so I don't really feel like I passed that test here. Right? I don't really feel like enough damage has been done. Right, if something like this had occurred, right, and it was a much more filthy sweep with a big wick tail, then I'd be much more inclined to move into position here, which was a difficult call because the 4-hour is delicious, right? This divergence structure is absolutely appetizing. A beautifully structured divergence on the RSI here, and one that we rarely see structures like this print. So far away from the mid in terms of the peak here. The overextensions, 17 and 22. The general structure and the shape of the divergence here with these twin peaks looking stunning. And the awesome oscillator here as well, with no argument about whether that's diverging and no argument about whether we have that confluence as well. So will I take this trade? I'm not too sure. We'll have to see. If we go to the 8-hour, for instance, now we could start to see the beginnings of an 8-hour divergence. Okay, so yes, skipped on the 4, but maybe take the 8 here. We get something like this. This is maybe going to be one of those spiky dips I was referring to earlier on in the stream. Again, a very nice divergence, but a different sort of shape and structure. And the AO is starting to look very severe here, right? Incredibly severe, this divergence, right? That sort of angle there. is very strong. Okay, so what we may see is price come down, and then tick the box, right? As for this, have the faders got messed up? So what I want to see potentially in this area, and also we could come down and just test this level, right? I'm not discarding that, but if we get something like this, then what it means is anybody who's sort of FOMO entered here, right, on this sweep and done something like this, which gives me shivers at this stage and age in my journey. But yeah, you're donating to the market basically if this is you, and more often than not you're going to get messed up, right? So you're not giving the market the respect it deserves. You're not moving in with wide stops. You're trying to cheat the market. You're trying to outsmart the market. You're trying to maximize your profits, and you end up with nothing in your hands more often than not. I want to play on the other side of that, right? And if we get this 8-hour divergence, potentially looking to move into that, potentially wait for Ethereum to invalidate its supply that we were talking about earlier. We want to see this invalidated, okay? And that may then make me feel better about moving into the position. Again, it's about sort of weaving together the picture of the market, right? It's not as simple as being systematic. You can have a checklist. You can have this checklist. I've actually forgotten at least one of these, but you can check my recent RSI video if you want to look into the full proper checklist. This golden 7 rule, I don't think is it valid, was me just throwing one in there. But you can have these sort of systematic checklists, even for something as visual as a divergence. But then it's not just about that, right? It unfortunately isn't as simple as just taking a clean divergence, taking out a independent low into higher time frame demand, all of these things which unfortunately may seem quite high level to you if you're starting out on your journey, but you have to transcend the simple technicals of the isolated markets you're looking at and really start weaving things together and go, okay, cool, deep looks nice. All right, got my eye on it. Everything's starting to diverge well on the 8-hour. We've had this very clean 4-hour divergence as well. If you want to operate, and you could still have taken the 4-hour dip, by the way, just build into it, right? So give yourself a stop wide enough to take partial installments, or take full installments, but fully honor the stop as well. Also another route, if you want to do it that way, you can. But for me, I'm waiting to see, do we retest this sweep level? Do we come down and mess up the faders? What does the 8-hour look like at that point? And I'm really just trying to be as patient as possible before I move into any positions in this area. The market is still not raging, right? We have a few things that pop off here and there, but generally speaking, it is not a heavily directional market. We have a lot of time. We should be very patient. Don't rush into positions thinking you're going to make money instantly. Instead, challenge that and go, okay, I'm taking this position, but I may lose this, right? Flip that on its head. And I'm happy I didn't take the 4 at the moment, right? As it stands at the moment, because essentially all we've done is come up here, reset at the 50 level and fail, right? Which is what I was thinking could occur. Considering this shallow sweep, and yeah, still waiting. And there's a few other markets as well that look particularly interesting at the moment, but I think I'll leave it there for today's stream. Unless otherwise notified, I'll be catching up with you all next Saturday 10:30. And if you have any margin that you're not using on any exchange, please do move it over to BitUnix. You basically get 30% free capital to trade with. It's an absolute no-brainer, and take advantage of this deal whilst I've got it for you guys. Okay, I've bartered hard for my audience to get it, so please do take advantage for it. Otherwise, it's just been wasted time on my side. Okay. Anyway, guys, take care. I hope this slightly more ranty live stream was beneficial for you all. Yeah, thank you for listening to me as always, and have a lovely weekend and happy trading.